Jeremy Howard from Cru. Thanks for clicking in. This is part 2 of a 3-part series on fine wine as an alternative asset, based on our recent guide to collecting and trading fine wine, which you can download for free. There's a link below. In this video, we're going to look at the 5 drivers of fine wine price appreciation over time. So let's get straight to it. The first reason why fine wine prices rise over time is the most intuitive, and that's because fine wine gets better physically over time. It's the only investable asset which does this. If we look at the graphic for Haut-Brion 2015, we see that this wine will get better physically for 60 years following bottling. And that's with no capital expenditure on the part of the holder, other than to cover the storage fees. The second driver of long-term fine wine price appreciation is the sharply decreasing supply curve of fine wine. And we see that very clearly when we look at the secondary market for Chateau Lafite. When we look at availability of a recent vintage like 2015, we can see a reasonable quantity of wine available on the secondary market. But that drops off a cliff as we go backwards in time, to the point where when we look at the 1982 vintage, we find that only around 150 bottles are available for sale anywhere in the world. And that's a result simply of the wine being consumed over the intervening time period. No other asset has this level of supply diminution. It's almost as if holders of Andy Warhol prints routinely took 1 or 2 and threw them on a bonfire each year. Unheard of in other asset classes, but that's exactly what happens with fine wine. So it isn't a surprise that when we look at the price curve for Chateau Lafite Rothschild, we find pretty much the inverse of the supply curve. As the wine gets scarcer and scarcer, its value goes higher and higher and higher on the secondary market. The third reason why fine wine prices rise over time is because their production is absolutely fixed. We looked at the top 50 fine wine estates and we found that only 4 had any meaningful capacity to increase production. The others are either like Haut-Brion and La Mission Haut-Brion, being surrounded by residential developments, or more commonly, we find that the value of the wine is linked to a specific vineyard in which it's made, and those vineyards cannot be reclassified very easily. The size of the Romanée-Conti vineyard in Burgundy will not change now, regardless of how stratospherically high the price of the wine goes. The fourth important factor driving fine wine prices higher over time is the simple fact that producers want them to go higher. The worth of a fine wine estate is effectively the capitalized value of future release prices. So producers have a strong incentive to push release prices higher. And they do that by focusing rigorously now on producing better and better quality wine, because that means that critics' scores go up and then they can justify a higher release price. We see that with a Bordeaux estate like Chateau Haut-Brion, which has dramatically increased the quality of its wine over the last quarter of a century or so, and it's been able to march its release prices steadily higher over that time period. Having focused on 4 supply drivers of fine wine performance, it's important to think about the demand side as well. And this is really crucial. There's 2 factors which I think are particularly important. The first is that the number of high net worth individuals around the world is increasing very rapidly. And these new high net worth individuals are increasingly looking at other assets other than mainstream bonds and equities as things they want to invest in. And collectible assets are particularly popular. When high net worth surveys, such as that conducted by Knight Frank, poll high net worth individuals, they find an increasing willingness on their part to buy fine wine, to use it as a store of value. And we think this is only going to continue. And the second factor, which will, I think, become more important over time, is the complete lack of institutional investment in fine wine. There is basically no institutional money in fine wine at the moment. And we think that over time, as its track record and other characteristics become better known, that will slowly change. And we will see family offices and institutions starting to dip their toe into this market. So overall, we find that fine wine has a unique set of characteristics. It improves physically with time, its supply decreases, its quantity of production is absolutely fixed. Producers have an incentive to move prices higher, and global demand is increasing around the world. So it isn't a surprise that we've seen fine wine prices perform so well over the last 25 years. And we don't see any prospect for any one of those 5 drivers to go into reverse anytime soon. And that means that the good performance of fine wine over time, we think, should be sustainable for many years to come. So please do watch the last video in this series, which will show you how you personally can get involved in this alternative asset class, if you're not already. And we look forward to welcoming you into this exciting new asset class. Thanks for watching.